So today I had a really good day. This whole week, basically, I posted this thing called market order flow. So what this does is kind of like show dark pool orders or order flow of like more larger direction for the S&P 500. And I had said that it's gonna go down to 426 into Tuesday, 429 rejection resistance into Wednesday, then pull back possibly to a 425 area, climb back up into 429. And what did it do so far? It did exactly that. Now, how to use the order flow is basically you have to understand that the market moves together, right? So this was on Monday or Sunday night. I have a weekly market review, right? So I go over the whole week, where the market's going, so that we know how to prep the week. So here's how to read it. So I was saying calls at 420 to 425, puts to 430, 425, right? So if you look at the chart, this is basically how we had closed the week, right here, right? So we closed the week right here, and it closed right in this area. And then I gave a summary, right? I gave a summary. This was where the area SPY weekly move is going to be very, very small. So then the expected move, I used that, right? And then I got, okay, let's figure out at least the full range, plus or minus for the full week's range. Then I said, okay, let's look at the Monday. Then I said, let's look at just Monday. So Monday, if you look over here, it's showing puts, calls, all of these, right? So what I found was majority of the puts, the lowest puts was 430. The highest calls was 425. So basically, you know that they're going to reject it at 430, and the market opened up into where? Rejection at 430, right? But if you saw where they were going to take it that day, maybe 425. So I said, okay, it's a little bit strong going into Monday, but then if it pulls back into the lower area of the calls, let's swing into the next day. And look at the next day, right? So I was projecting 426 into Tuesday because of this range first, rejection from the 430. And if you look at the Tuesday order flow, you're going to be seeing a lot of like puts down to 425, but calls holding it up at 426. Calls holding up the market 426, right? So I said calls possibly to 426 into Tuesday, then reversal. So look what happened. Monday, 430 rejection goes down to what? 420, maybe 425. Continues to 426. Then reversal, right? Reverse, right? So then on Wednesday, I showed these, which was all puts at 429, puts at 429. So I said the next day on Wednesday, we're going to see rejection at 429, right? Wednesday is the rejection. So we go first from a high Monday, going down into Tuesday, then it goes back up to where the puts are, 429, because all the strikes are higher, right? So then we're going to watch for SPY to go back up to 429, right? And then gets rejected. Now, how do you know how far? Because the next day I already also planned it. Trading notional lower values, right? So you see all the strikes that are lower into the following day after the rejection of 429. So now we're like, okay, look at all these strikes, right? They're lower. So basically I'm like, okay, how low do these strikes go? So look at this one. The calls at 426, but then they're still pressing it down under 429, right? So now the range is higher though, but with lower calls. So now I'm like saying, it's going to go down low from the rejection from 429 here, gets rejected. We see the 425 area, right? 425 right here where you see the calls. Because if you see this area for the calls, then you're going to see 425, right? 425 puts, 426 puts, but 427 calls. So basically I'm making sure that the calls people can make money and the puts people can make money. Both sides have to be winners. Does that make sense? And we have to figure out where is the market going. So into Thursday, I said it's going to go down to 426. Now this is Thursday, which is today. 425, 426, right? 425, look. 425, 425, right? Where did it go? 429. 429, right? Because why? I'm seeing now higher calls. 429 to 430, right? 429. Does that make sense? So we want to look for the wavelength of where is the notional value, the money going into, so that we can trade now the market based on how the SPY is going to act. How we played this was, we swing up when the SPY is going up, and then we scale out calls when we hit our target. Then we watch for a dip. Maybe you can place some puts on the short term. And when we hit our mark again, we go long. And, you can trade volatility if you understand where the market's going. And then on these dips, you can position yourself into the next ER run-up. Because Q2 is going to be one of the strongest quarters for earnings and overall market because the guidance is strong going into summer after Chinese New Year is done, right? So shipping for consumer discretionary, tech has been a rally, and especially with Tesla. Now, Tesla's a different story. Tesla went to 105, then it went to 215, right? Where did it pull back to right after ER was 151, where I got it at support. Our whole community swung. And one of the best AI companies, like, hello, NVIDIA is running, so Tesla should too, right? I believe that this is going to continue and go up to at least 265 to 274 quarter two because of the AI factor, and they just came out with news with General Motors, right? So this is going to be strong continuation going into the next quarter, into the end of the year. Keep long term so that you don't end up chasing these short-term moves, continue your growth, and when you see strength, get the short term. I got the 225, 235, got the swings into next week, and also the swings into next quarter. So hopefully if you're able to join in these, you're making money too. And it's important to understand order flow. I hope these tips helped, and if you want to come trade with me, always come check out SuperLuckeee.com. Give me a like so that I can keep giving you more tips, and God bless. Always stay long.